Yes guys, welcome back to another YouTube video. Alright, I hope all of you had a great Christmas and a great Happy New Year. But it's time to get back to work. So in today's video, we're going to be covering all of the PD arrays that I myself use on a day-to-day basis inside of my trading. So we're going to be covering mitigation blocks, breaker blocks, order blocks, fair value gaps, you name it. And then we're also going to be showing you a few examples at the end of the video showcasing how to actually use these PD arrays to your advantage and also maybe even add it into your own trading model. So let's jump straight into the video. As you can see, we've listed out a number of PD arrays that I find useful. Okay, there are tons and tons of more PD arrays that you can use. However, these are the ones that I use inside of my trading model. And these are the ones that I also find work the best. If you want to learn all of the PD arrays that ICT mentions on this channel, that's fine. Head over there and you can learn every single PD array that there is. However, I feel like there's no point of overcomplicating things. Okay, let's keep it simple. There's no need to have 20 different PD arrays. Okay, there's just no need at all because you're not going to be using every single one of them. Okay, so let's jump straight into it. Okay, so starting off with breaker blocks. All right, let's go over the definition first, and then towards the end of the video, we'll go over some examples. Okay, so a breaker block is defined as a failed order block taking both sides of liquidity. All right, so both buy side and sell side has been taken and they have been rated inside of this scenario. Okay, so a bullish example, you have a low here, a swing high, a lower low taking that initial low, and then a higher high displacing through that short-term high, okay, leaving behind a bullish breaker block. So the highest up close candle within that swing high is what you mark out as your breaker. Now, if you find that a little bit confusing, don't worry guys, again, stick towards the end of the video. We'll go over a few examples and that way you'll understand this more. But that is the brief explanation of what a breaker block is. So let's move on to fair value gaps, okay? A fair value gap is defined as an imbalance or an inefficiency left behind in the market that you can expect for price to act as a magnet within the future and return to this point of interest. A fair value gap can also act as support or resistance depending on the direction you are trading, of course. So for example, we have a bearish fair value gap, okay, price retraces back into that. That's going to act as resistance if you're taking shorts. In a bullish scenario, okay, you have a bullish fair value gap, price retraces into that gap, that will act as support to push price higher. Okay, hopefully that makes sense. A fair value gap can also act as buy side or sell side liquidity, as there is a lot of liquidity resting inside these areas. So once again, if we have a bearish fair value gap and price retraces back into that, that can act as a sweep of buy side liquidity. Okay, ICT has mentioned this inside of his 2022 mentorship video. So if you watch that carefully, you will hear him say that. Okay, let's move on to mitigation blocks. A mitigation block is very similar to a breaker block. Okay, the only difference here is that instead of taking a high, it will fail to create either a higher high or a lower low, depending on the direction you are trading. So let's give you a bearish example. Okay, you have that high, you have that swing low, and then the next high, right, in which case the breaker block would take the high. With a mitigation block, it will be a failure swing. Okay, so that failure swing high fails to take out the buy stops on the recent swing high, and then you get that lower low displacing through that swing low, and then your lowest down close candle is your mitigation block inside of that displacement leg. Okay, so hopefully that makes sense. They're very, very similar. Only difference here is that a mitigation block just fails to take that swing high or fails to take that swing low, depending on the direction you're trading. Okay, so bearish example fails to take the swing high, bullish example fails to take the swing low. Very, very simple. Yes guys, just a quick announcement. All right, the VIP live trading signals group is now available for only $50 a month. We are starting trading again on Monday, which is literally tomorrow, so be ready for that. We haven't traded in around a week and a half because of the Christmas and New Year's holidays. Now, I know my group is itching to start taking trades again, so don't worry guys, we are coming back tomorrow and we will be trading live on Zoom as usual. Okay, so if you aren't already inside the group or you have been waiting to join, this is the time. Okay, you want to start your New Year's correct. Join the team. Okay, it's literally the #1 ICT live trading signals group that there is. Now, don't take it from me, take it from 300 people that are currently inside of our group. It only says 103 people as we do have most of our subscribers that have signed up back in the past through Stripe instead of Whoop. But this is the new platform that we are using, and don't take it from me guys, take it from the members that are already inside, okay, and read their reviews, see what they think about it, okay. There is also a lifetime access option available, okay, which is a one-time fee, and instead of paying monthly, you can just join for life. But yeah guys, I'm gonna keep it short. If you wanna watch me trade live literally every single morning at New York Open at 9:30 a.m. New York time, you wanna get access to live signals through Telegram, and you also want to join a VIP chat room for networking and support, then this is the place for you, okay? So if you are interested, go check out all the links in the description and go secure a spot. But other than that guys, let's get back to the video. Okay, number 4, order blocks. Now, I don't tend to use these as much as I do with the other PD arrays. However, they are still very, very useful, okay? So an order block is when the opening price of a candle gets violated, okay? To give you guys an example, down close candle, opening price, okay? That gets violated to the upside, preferably a candle closure above. And then this down close candle can act as support for price when it decides to retrace in the future. So you can mark out that opening price, that will be your order block. Now, once price decides to retrace to that area in the future, you can decide to take a buy position and expect that order block to act as support and push price even higher, okay? Okay, number 5, the final PD array is the inverse fair value gap. Now, this one is an absolute game changer and is definitely something you need to add into your trading, okay? So an inverse fair value gap gets formed when the regular fair value gap fails to hold or support price, and price instead decides to aggressively move higher or lower, disrespecting that original FEG, and this is now become an inverse fair value gap. So what do we mean by that? Okay, you have that original FEG, which is the 3 candle formation or pattern. I don't really like to use that terminology when it comes to trading because we're not pattern traders over these sides. Okay, but anyways, you get that FEG and price either aggressively moves lower, disrespecting that original fair value gap. It has to displace through that FEG to actually become an inverse fair value gap, okay? If it doesn't displace, it's not going to be a valid or high probability inverse. Now, same for bullish scenario, okay? You have a bearish fair value gap, price aggressively moves higher through that fair value gap, displacing and creating an inverse FEG, okay? So these are useful as typically when a regular FEG is formed, it will respect price and continue its trend, okay? So when that doesn't happen, we know that we may be wrong about the current direction or drawing liquidity, and we can switch our bias instantly, okay? This is why this PD array is very important to add to your strategy, because sometimes, okay, we are humans, okay? We're not robots, and you may be wrong about the current direction or drawing liquidity, and you have to know when to switch bias quickly, okay? And that's when the inverse fair value gap comes into play. So anyways, now that we've covered all of these PD arrays, we're gonna be jumping into the charts, and we're gonna be showing you a few examples of these in play on the live charts, and that way you can learn it more easier and you can see it visually for yourself. So let's jump straight into it. All right, so let's start off with the inverse fair value gap. This setup actually happened a few days ago, last Friday. Okay, we weren't trading this week, but we are gonna be starting trading from Monday, so literally tomorrow. But anyways, as you can see here, okay, we raided buy side liquidity, took out all the buy stops. We had this bullish fair value gap here, which price was respecting and supporting at the time, okay, to push price even higher. We got this short-term low here, okay, and what ended up happening is price literally just displaced through this short-term low, okay, so market structure shift, and we also inverse this bullish fair value gap. So that's even better, okay, that is a more high probability inverse fair value gap compared to if we just inverse the gap and there was no structure to break below. So this is actually higher probability as we have 2 things, okay? We have the inverse and we also have the market structure shift. So even better. Now with the inverse fair value gap, what you do is you enter straight away, okay? So as soon as this candle closes like this, you don't wait for a retrace into that inverse, you enter short straight away and you put a stop just above either the inverse fair value gap, so the high of this, or the displacement candle's high, okay? Either stops is valid. And then of course you target the opposing liquidity, which is sell side down here. So let's see how this would play out. boom, TP would have been smashed and the objective was taken. So that is an example of an inverse fair value gap. Now, this is actually a very good example of a mitigation block also. However, the mitigation block never got tapped into. So as you can see here, you have that high followed by a low, followed by a failure swing high, okay? Notice how this failed to take out this high, and then that lower low displacing through that low, okay? And then you would mark out the lowest down close candle here, which would be your mitigation block. However, as you can see, price never retraced back into that mitigation. So this is not going to be an example, but I thought I'll just quickly explain it to you guys. But anyways, in the next slide, we're going to find a nice example of the mitigation block where you'll see that price taps into it and it plays out very well. So let's jump straight into that. All right, so here we go. This is a mitigation block, a bearish example, all right? So as you can see, we've swept some sort of buy side liquidity. As you can see, we have that swing high right here, swing high followed by a swing low. Okay, what does price go ahead and do next? We try to take out this high here. Okay, so everyone going short here. We tried to take out the buy stops. We failed to take the buy stops. Okay, so this is a failure swing high. So you have high, low, failure swing high, displacement through that swing low. Okay, so this candle here, as soon as we break this low and we displace through it, this now becomes our mitigation block. Okay, so as you can see on the next candle, as soon as price trades up into that mitigation block, that down close candle's low. So you see that wick here, as soon as we trade back into it, you can take a short entry, stop loss above the swing high. Make sure you're not risking more than 25 to 30 handles if you're trading NQ or NASDAQ. And of course, target the opposing liquidity. So let's see how this trade will play out. Boom, straight to sell side, objective has been met. Let's move on to the next PD array. All right, so in this scenario, this is actually a bearish breaker block example. So as you can see, we have that swing high, okay, followed by a swing low, followed by a higher high, all right, taking all of these buy stops, okay. Any traders trying to short this move here, they get stopped out. And then we get that lower low displacing through this swing low, okay, leaving our breaker block. So breaker block is literally the last down close candle at the swing low. All right, so high, low, higher high, lower low, okay? And this right here is gonna be your breaker block. As you can see, this candle displaced through that swing low, very clear displacement and a strong closure. As soon as we retrace back into this area of interest, so this green up close candle here, as soon as it taps that breaker block, you can enter short. Make sure you're not risking more than 25 to 30 handles max, and then target the opposing liquidity, all right, which is sell liquidity down here. Boom, as you can see, it worked out very, very nicely, okay? So let's jump into the next PD array. All right, so this next example, very, very simple and textbook setup. All right, so we sweep buy side liquidity, we get that displacement lower, okay? What do we have here? This is a clear fair value gap, okay? So clear FEG. Most of the people watching my channel already know what an FEG is, but if you don't know what an FEG is, okay, all it is this three candle formation, right? So you have this first candle here, second candle here, and the third candle here, all right? And usually the second candle, well, all of the time, is a displacement candle. And as you can see, we have that imbalance or inefficiency between the first candle's low, okay, and the third candle's high. That little imbalance there or inefficiency is what you mark out and is what we call a FEG or fair value gap. All right, so as soon as price trades up into that FEG or fair value gap on this candle's high, okay, you get another opportunity to enter here. You enter short, stop loss above the swing high, and then you target the opposing liquidity. All right, and there you have it. Price ended up hitting the objective. Very, very nice. Just make sure once again you're not risking more than 25 to 30 handles if you're trading NASDAQ, okay? There you have it, guys. We're gonna be doing one last final PD array, which is the order block. So let's jump straight into that one. All right, so as you can see, we've swept some sort of sell side liquidity. We've displaced higher, and we have formed this bullish order block here, which is the down close candle, okay? So as you can see, the opening price of the down close candle is right here. So if we mark this out, there you go. that is the opening price of the down close candle, and that is your bullish order block. What I like to do is I like to mark out the whole down close candle, all right? So the high and the low, and this will give me a good area of interest that I can focus on rather than just looking for an entry at that opening price. So I like to mark out my order blocks like this. I know some people tend to trade them differently, but this is how I trade them, and this is what works best for me. So this is actually a bullish example if you haven't already noticed, but any bullish order block will always be a down close candle. And now any bearish order block will always be an up close candle, okay? So as you can see, that opening price gets violated, okay? Price strongly and aggressively displaces through that opening price. Price later then retraces back into this area of interest. Within the future, that is when you take that long entry and you target the opposing liquidity. So let's see how this will play out. Okay, took some time to get there, but ended up hitting the objective at the end. So there you have it, guys. I hope you enjoyed this video. Okay, I hope you got some sort of value out of this. Now leave your suggestions down in the comments below of what type of videos you want to see next. Okay, I'm thinking of doing vlog style type of content, day in the lives, etc., to show you guys a bit of my personal life as well. I don't mind doing these educational on the chart type videos. If that's what you guys want to see, then I'll continue doing that. But anyways, guys, please leave a like, leave a comment, share, and make sure to subscribe to the channel. But other than that, guys, take it easy. All right, have a great rest of your day. And VIP members, I shall see you lot on Monday inside of Monday's trading session. All right, I'll see you lot in the next one.